Welcome everyone. In this video, there is an important date for Xcn coin. We will look at why this date is important. But first, let's analyze whether Xcn coin will rise. Don't forget to subscribe and like, and please watch to the end to understand. First of all, there is an important technical pattern in the market, a falling trend line. This trend line shows that the price has been continuously moving downwards in a given time frame and has touched this level many times. Although the price has approached this falling curve several times, it has not yet managed to break this level. Breaking above this type of trend is usually considered a critical signal for the price to start an upward movement. This type of downtrend indicates that the market is at some point capped and facing strong resistance. For traders, these levels are areas to watch out for, as a break of the trend can always open up a new opportunity. To be bullish, the price needs to break above this curve and be able to hold above it. If the price manages to break through this falling trend line and settles above it, this could signal an important breakout. This is usually an indication that a new bull move in the market has started or is potentially close to starting. If the price breaks through this resistance level, the movement is likely to accelerate, and a stronger uptrend is likely to start. Such a breakout could also boost traders' confidence in the market and open up new buying opportunities. At the same time, such breakouts can also trigger a series of patterns that are usually followed in technical analysis, which can cause the overall direction in the market to be upwards. However, the price breaking this falling trend line is not only important from a technical point of view, but also psychologically, as it can make market participants change the direction. Traders may tend to buy more when such critical levels are crossed. This causes the price to gain momentum. If the price crosses this level and settles above it, it can be considered a confirmation move, and traders can open positions more confidently. Elliott wave theory assumes that financial markets naturally form around certain cycles and movements, and it is an important tool for traders to better understand and time price movements correctly. In the current situation, the completion of the first and second waves suggests that the market is undergoing a major structural transformation. Such cycles are usually periods of initial accelerations of the trend followed by corrections. Therefore, the completion of these two waves is considered an indication that a new structure will be built in the market. These structures often form a foundation for the preparation of larger waves. Now comes the strongest and longest wave, known as the third wave. In Elliott wave theory, the third wave is considered to be the one that shows the most power, where traders gain the most and the price rises very quickly. This wave creates a very strong buying pressure in the market, pushing the price to significant levels. The third wave usually follows smaller moves at the beginning of the trend and creates bigger opportunities for traders. When the third wave begins, the majority of buyers in the market come on strong, causing the price to move up quickly. The bullish sentiment in the market also gives traders more confidence during this period. Fibonacci levels are frequently used tools in technical analysis to determine the direction and possible targets of price movements. These levels provide a mathematical structure built on top of past price movements and indicate when the price is likely to correct or resume. The 1618 level in particular is one of the most important targets of the theory based on the Fibonacci ratios of this level. Traders often use this level to predict how the price will move going forward. If the price gains momentum by targeting the 1618 Fibonacci level, it means that the price will continue to go up strongly. This would indicate that the uptrend is based on solid fundamentals and that a broader bull move could be triggered in the market. Breaking this level gives market participants a lot of confidence, as it usually signals the start of a new trend. If the price crosses this level, this could result in the market entering a stronger bull trend. In such a case, traders can increase their gains by buying higher targets. Also, Fibonacci levels allow traders to better manage risk at these levels, as they show how far a price movement can naturally continue. Elliott wave theory emphasizes that the market moves in a natural cycle and that these cycles are shaped by certain patterns and rules. This allows traders to more accurately predict price movements. The third wave is one of the most important parts of the Elliott wave structure and is usually the most profitable. The completion of this wave could signal a major market rally. If the price tests the 1618 Fibonacci level and stays above it, then a further acceleration of the rise can be expected. When the third wave begins, traders can usually observe that the market starts to peak during this period. However, the most important thing to watch out for in this process is that the price holds after breaking these levels. If the price manages to break the 1618 Fibonacci level and hold it, it will be a confirmation that the bull trend in the market will continue. Such breakouts usually create more buying opportunities for traders and can add momentum to the market. Also, once the price reaches these levels, trading volume can be expected to increase as more investors show interest. This is a factor that reinforces a healthy rise in the market. The Vortex indicator is a highly effective tool in determining the strength and direction of the trend in the market. This indicator often plays an important role in understanding the direction of price movements and potential turning points. The vortex consists of two main lines, the red and blue lines. The red line symbolizes the strength of sellers' pressure and downtrend, while the blue line symbolizes the strength of buyers and bullish momentum. The intersection of these lines gives important signals about the direction of the trend. Currently, the red line on the vortex indicator has been on the upside for a long time. This indicates that sellers are still putting pressure on the market and the current downtrend is continuing. However, there is a high probability that this situation will change in the near future. If the blue line crosses the red line to the upside, it would indicate that the balance of power in the market has shifted and the pressure from buyers has increased. At the point where the blue line crosses the red line, the start of the uptrend is highly likely, as this signals that buying power is on the rise and the market is starting to move in a more positive direction. If the vortex indicator shows such a shift, it could herald a potential trend reversal in the market. Increased pressure from buyers could result in the price bouncing off the previously tested support levels and heading higher. Such a move could open up valuable opportunities for traders. In particular, the blue line crossing the red line upwards could result in the start of a strong bull move in the market. At this point, buyers taking positions in the market and creating more demand could contribute to a rise in the price. The blue line crossing the red line upwards also indicates that the general mood in the market is improving and the uptrend is gaining momentum. This kind of movement can create great opportunities for traders as a positive momentum builds in the market. If this signal is confirmed, the price can be expected to move upwards quickly. Also, at this point, buying opportunities become even more pronounced because traders can anticipate that the price will increase and the market will move strongly in a bullish direction. This kind of change seen on the vortex indicator could be not only a short-term momentum boost, but also a longer-term trend change. That is, if the price turns bullish, a major bull move could begin in the current market conditions. Such a move could allow market players to develop longer-term strategies. The acceleration of the uptrend indicates that not only short-term, but also long-term gains will be possible. When the blue line crosses to the upper side, we will see show bullishness. The RSI indicator is a crucial tool for measuring market momentum and identifying overbought or oversold conditions. Looking at the current RSI chart, we can clearly see the presence of a downward trend. The RSI has consistently formed lower highs over a period of time, repeatedly touching this descending trend line. However, for the price to enter a healthier and stronger uptrend, breaking this downward RSI trend to the upside would be a highly significant signal. The fact that the RSI has been in a downtrend for an extended period indicates that selling pressure is still dominant, and buyers have not yet gained enough strength. However, this situation cannot last forever. In financial markets, every decline eventually leads to a rise, and every rise is followed by a correction. From this perspective, a breakout of the RSI from this descending trend would be a clear indication that the market is gaining strength and buyers are becoming more active. If the RSI successfully moves above this descending trend line, the likelihood of a price rally will increase significantly. Such breakouts often serve as important signals for market participants. When the RSI breaks a downward trend line, it suggests that buyers are starting to take control, and the market may be gaining new momentum. If the RSI manages to break above this level and hold, the price is likely to follow suit, leading to stronger upward movements. This in turn could boost investor confidence and increase demand in the market. Moreover, when an RSI breakout aligns with price movement, the signal becomes even stronger. If the RSI makes a bullish breakout and at the same time, the price starts to rise, it could indicate an acceleration in the uptrend. In such a scenario, the price may begin to test previous resistance levels and even push toward new highs. During downtrends, we often see the RSI getting squeezed, with the price moving weakly in parallel. However, such consolidations do not last indefinitely. If the RSI eventually breaks out to the upside, it signals that the market has chosen a new direction and buyers are becoming stronger. Therefore, the RSI breaking above its descending trend line is a critical level to watch. If this breakout occurs and the RSI starts moving upward, it could create a positive sentiment in the market. This could encourage investors to take bolder actions, further fueling price momentum. A breakout in the RSI would also indicate an increase in market momentum, helping the price enter a more defined uptrend. In summary, the RSI indicator is currently displaying a clear downward trend, and a breakout above this trend line is necessary. If this breakout happens, the price could see a strong upward movement, adding momentum to the overall market. Such a breakout would suggest that selling pressure is diminishing, and buyers are stepping in, which would be a highly positive development for price action. April 15th will be a critical turning point for XCN coin, as approximately 300 million XCN tokens will be unlocked on this date. At current prices, this amount is valued at around $3.37 million. While it's never easy to predict how large-scale token unlocks will impact the crypto market, these events typically lead to increased volatility, meaning that we could see significant price fluctuations in XCN around this time. Large token unlocks are key events that directly impact the supply-demand balance of a cryptocurrency. Depending on the size of the newly released supply, price fluctuations may occur. If a significant portion of the unlocked tokens is sold, it could put downward pressure on the price. However, if investors perceive this event as a strategic buying opportunity, the selling pressure could remain limited, allowing the price to stabilize at a certain level. Institutional investors and large holders tend to price in token unlocks in advance, and in some cases, market movements can anticipate these events. For example, before a major unlock, some investors might sell in anticipation of increased supply, causing the price to dip. However, once the unlock actually occurs, uncertainty is removed, and the price might recover. This is a classic example of the buy the rumor, sell the news strategy. A key factor in XCN's ecosystem is the EIP 1559 mechanism, which helps regulate supply in the long term. Through this mechanism, a portion of XCN is burned with each transaction, gradually reducing the overall supply. However, the introduction of 300 million additional tokens could still create short-term pressure. If these unlocked tokens remain in the hands of long-term investors and are not sold immediately, their impact on the market might be minimal. At this stage, investor sentiment and overall market conditions will play a crucial role. If the broader crypto market is bullish and demand for XCN remains strong, the unlocked tokens could be absorbed by the market without causing significant price declines. However, if the market is weak or trending downward, this unlock could add to the selling pressure, keeping the price under pressure for a while. The strategy of large investors and whales holding XCN will be another key factor in determining price action. If major holders and believers in the project continue to hold their tokens, the percentage of unlocked supply that actually enters the market may be low, minimizing any negative impact. However, if these major players choose to sell, it could trigger sharp price movements in the short term. Additionally, the broader crypto market trend will heavily influence how this event plays out. If Bitcoin and other major cryptocurrencies are experiencing a strong uptrend around April 15th, the selling pressure on XCN might be relatively lower. However, if the crypto market is in a bearish phase, investors may be more inclined to sell their unlocked tokens, leading to stronger downward pressure on price. Another important factor is whether investors have already positioned themselves for this event. If many traders have anticipated the unlock and sold their holdings ahead of time, the actual unlock may not trigger a significant sell-off. On the other hand, if the event catches the market off guard, it could cause short-term volatility. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.